It's great. It's a great intro. Maybe you need some life insurance.
100%.
Okay, hello everybody. Welcome to another SoFi. We have Palantir Weekly. We are here today with Dominic Rinaldi. We are also here with who are we with? We are with Matt Money, and we are with Arnie as well. Lot to talk about. Obviously, Nvidia earnings this week were really, really important. Big determinant for the AI market and where it's going. And obviously, Palantir is trying to sell and capture a majority of this AI market. Dom, you have held Nvidia since 2019. I want to kind of give it off to you and give us a rundown on really a couple things. So why'd you buy the shares? How did you hold the shares? And then eventually, after you get through that, what do you think this kind of means for Palantir? Go ahead.
Yeah, sure. So I've been holding Nvidia since 2019 in February. Invested $10,000 to start out. It was one of my big 4 tech bets. Between that, Mercado Libre, the Trade Desk, and Shopify. Very familiar with the company. As a kid playing the games. I remember when it was 3DFX, if anyone can remember that, and the little iguana climbing the stems. And always been a big fan of Jensen Huang and kind of what his vision was to really bring a whole platform approach to infrastructure. I'm actually working on a new article on my Seeking Alpha about this. The Mellanox acquisition has just proven to be one of the most strategic acquisitions of all time for tech for a company. It's really bringing a lot of things together. Haven't sold a share, keep adding, keep dollar cost averaging. When the Trade Desk spiked 45% after earnings, after a normal beat, I actually had my first really big stock sale, and I sold out of that position. Essentially, I had a little bit left, and I put it all into Nvidia when it was like 113 in September. And so I just knew that, I've been through several dips with Nvidia. When we had the China tariffs, when it went to 144 or whatever, right before 2020. And then when everyone freaked out about the glut inventory on graphics cards for gaming last September, it was, a great buying opportunity.
Okay, cool. So when the shares were at 280, 200 or 300,
I was writing articles and still buying.
Okay, and so for you,
got a lot of hate for that.
You understood Jensen Huang's vision. I heard him for the first time on the earnings call a couple days ago. You really understood that vision around how legacy IT infrastructure is going into generative AI and accelerated computing, and that every enterprise in the world is likely going to need this. And so you kind of realized this was going to happen regardless.
Yeah. I mean, in my article, I won't talk about too much of what I'm going to share in that, but he identified the bottlenecks within IT infrastructure and what was really going to happen with Moore's Law and how that was going to kind of die off, and really understood the connected tissue between networking. And this is the world I work in. This is the world I work for VMware. So we made a big announcement at our conference this week with a partnership with generative AI with Nvidia as well, with compute, GPUs, CPUs, and key part being that networking, being able to eliminate those bottlenecks, all the while connecting this platform approach of he calls accelerated computing. They are really the only accelerated computing platform company in the world. But what was so strategic was, in the background, he had several different departments working on the other pieces that really set NVIDIA apart from anyone who tries to mimic it. So you can try to make your own semiconductors, you can try to make your own hardware, but all the while he was building CUDA, which is their developer application library, which now has over, I think, 5 million developers on it. Was building all the frameworks and the libraries for getting developers on the NVIDIA platform and training them on it. And then he was also putting together different software platforms and application frameworks, such as the Omniverse, for collaboration, for enterprises to work with each other globally in real time in different time zones and continuing projects. and then created a file format called USD. And you'll hear more about USD if you watch any of his talks. Apple's now using USD. It's this universal, I forget what the abbreviation is for it, but it's a universal file format that allows you to take 3D objects and everything and in real time edit things. Mix that with AI and being able to now code via text and voice. You don't have to be a programmer. I can literally say, make Arnie's character fight Matt and win. And literally the character will do that, right? So totally transforming how compute bottlenecks were being handled and then putting the software layer to it so that way it can fully scale in all the different use cases. They're in robotics, they're in autonomy driving. They have $14.5 billion not recognized in contracts with Mercedes, Jaguar, Land Rover, etc. Healthcare. And then I wrote an article about 2 months ago how they started investing in AI companies. They have over 10,000 AI startup companies that they invested in a program that they built. So if you're an AI company, you can get access to their hardware and their software, and they can also invest in you. It was brilliant, a little different than what Palantir is doing with the SPACs, but really, has really been a good opportunity. And they're going to be investing in the ARM IPO coming up here soon too.
Okay. Arnie, your reaction to Nvidia earnings and sort of the general AI landscape that we are in right now. Oh, Arnie, you're muted.
Okay, sorry. So let me say that I like Nvidia as a company. I'm not directly interested in Nvidia as a company. So from the perspective of a Palantir shareholder, I'm interested in seeing what are the key underlying trends that are developing. And the results give me a clear picture that the underlying thesis for the business of Palantir is getting stronger and stronger by the day. So there was a lot of mess on Palantir Twitter about this because we triggered some people commenting about our takes, and our takes were mainly not on the fact that if Nvidia sold a lot, that also means that Palantir will sell a lot. But the key underlying trend is the demand for AI products in hardware is very strong. That's a matter of fact. And if you have a lot of hardware for doing certain things, is because the demand for that certain things are there. So let's say you buy hundreds of millions of GPUs. What do you do with that? You don't stay there. You don't keep them just stuck. You buy them because you expect to have software applications that use them. And Palantir is one of those many applications. So nobody expects that there is a one-to-one relationship, but it's like saying the tide is going up, and when the tide goes up, it lifts all the boats up with it. So that's clearly a positive sign for the demand of Palantir products. Now, again, there is always the question about the execution. But I think we covered Palantir very closely. We see a very different execution from last year. So let's say if we were stuck to the execution we were used to see last year, given the current environment of high demand, I would be very skeptical. But given how the company, the management is now focused, and we are seeing it not only with words, but also with the hundreds of events, we see they keep getting customers. Also with Eder Square, he shared a lot of active new links. Also in Europe, which we know that is the more lagging reason. So nobody is saying that Palantir is using Nvidia GPUs. We know that if there is high demand for Nvidia GPUs, is because cloud providers have clients willing to spend a lot on software, and Palantir is just one of those software that is gradually becoming the standard to deploy generative AI into their operations. If this is true, and Palantir is actually able to execute well, we know that this is only a matter of time before the revenues of Palantir that have been gradually going down in terms of growth actually have a very positive wind to actually reverse that trend. And reversing that trend is not only great to see from a business perspective, that makes Palantir one step closer to become the monopoly that we seek, but also in terms of valuation, because so far, if there will be not an acceleration, it is not actually easy to sustain an important multiple.
Okay. Matt, your thoughts on Nvidia earnings and any relationship you think that has to Palantir?
For sure. Well, first and foremost, I thought it was brilliant earnings. I mean, they had over what was like 300% year over year EPS growth and 100% year over year revenue growth, which I thought was brilliant for them. My thought process immediately goes to how long can they sustain it? I didn't really anticipate a huge, and I'm not saying that in a negative way, right? I'm just like very surprised, right? The huge growth that they saw from Q4 to Q1, and then a continuation going from, I think it was like 7 or 8 billion in revenue in Q4 to over 10 billion in Q1, and now over 13.5 billion in Q2. It's just very impressive. And so I think that that's going to continue for at least the short term. The medium to long term, I thought Chris and I had a very thoughtful conversation the other night about other people that are truly focusing on their own TPUs and NPUs to kind of help combat some of the increasing costs. The reason being is Nvidia, based off of what Chris was kind of saying, it's like the cost is anywhere between $2,500 to $3,500 to build some of these chips, and they're selling them for $35,000 to $40,000 each. And so that's a huge margin, right? That they're able to walk away with. And if other people kind of come to the table, you'll eventually see that kind of shrink on each margin, one. And then two, if you're able to build it for $2,500 to $3,500, I don't understand why you're not going to see Googles and the Apples and the Microsofts of the world, which already are designing their own sort of TPUs and GPUs to be able to help combat this. So, I think that Nvidia should make hay while the sun is shining. I think they're doing a great job. And relating it back to Palantir is going to benefit from all of this, because if Nvidia is obviously selling a lot of chips to the Amazons of the world, the Googles of the world, the Microsofts of the world, Palantir utilizes Azure and GCP and AWS to power their platforms. And so it's beneficial because Palantir is getting the computing power in the background, but Palantir doesn't actually buy any of the particular sort of upfront costs. Yes, they will still have to pay for some of the usage for cloud and everything of the like, but they're not the ones that are having to recreate the infrastructure and stuff of the like. That's obviously put onto the Amazons, Googles, and the Microsofts of the world. So Palantir is kind of a beneficiary of all this computing power to an extent. And to me, I think that this is seeming like you're gonna have more and more usage over time of these sort of products. And I even was having a conversation with a friend who I actually recommended Palantir. He works at one of the big four accounting firms, and they were kind of talking about, LLMs and this and that. And I was like, Palantir all the way. And he was just like fighting me on it. And I was like, my guy, trust me, I understand the space a little bit. I was like, I work it a little bit with Palantir. Check it out. And it's I think something that the modern day enterprise is finally starting to explore, the fact that like LLMs are even a thing and necessary to continue the modern enterprise into the rest of the 21st century, versus 2-3 years ago, people were probably just sitting there like, oh, we just need data engineers to, collate the data and everything will be okay. It's now getting to the place where it's more common that LLMs are a thing. And Palantir was building things like ontologies and LLMs before it even became popular. So it just goes to show you how this immediately impacts the forward trajectory for the company. And my thought process is what are we going to hear out of Palantir next in terms of what is going to be the thing that they are 3, 4, 5 years ahead? If everybody else is starting to talk about LLMs, what are they going to introduce to the world that is going to be next revolutionary? Because Foundry was a good product. AIP will be a great product. Apollo is a great product, but there has to be something else that we have yet to really think about that Palantir will eventually come out with in the next 2 to 3 years. That is going to literally just blow our brains because of how revolutionary it is. but maybe I shouldn't jump ahead 3 to 4 years. I should just bask in the greatness of what AIP is so far doing and what Nvidia results are.
Yeah, I mean, when you
Go
look
ahead,
at Austin, he made a comment. He said the only way you enable full utility and solve shortcomings of LLMs is via grounding of the model within a specific corpus knowledge base. That is what Palantir AIP enables from CodeStrap. That's exactly right. So with Nvidia and all these LLMs, everyone's going to try to modify these LLMs and get to their own private data. Nvidia does have a security guardrail system in place called Nemo to help kind of from a security perspective. But in general, there still is nothing out there in the market like Foundry that creates the ontology that allows for, and you know this, Max, you work with the product, with no code or low code to be able to take all of your business data and ingest it, take whatever LLMs you want and everything else you have, put it into the ontology, and then actually operate your business differently. It is a mind shift. It is a transformational shift on how you run your business. But once everyone gets on board using that platform, then all of a sudden you're seeing transformation and return on investment. And that's what everyone's looking for in the industry, right? Why is everyone excited about artificial intelligence? They're trying to lower costs, improve efficiencies, automate, reduce CapEx spend. And the ontology allows you to do all of that. And that's why companies like BP and others have been, customers for over a decade, because they keep finding new value propositions to use the product itself. And it gets better and better the more data you ingest. So I think I get it that you're excited about new products, and I hope we do come out with new products. I really do. I think there's so much untapped for Apollo and Foundry in itself, just from the simple thing of going back to what we talked about last time I was on, which was the business model, acquisition, expand, scale. I still think out of the, I don't know, what are we at, 400 customers now? Out of those customers, there's still a lot of customers that are not in the scale phase. So I think I just wrote some notes down. You probably already talked about this since I was gone, but Westtrack, the Australian renewal, was a 5-year renewal. So they had them for several years, and then they get a 5-year renewal on top of that. It's very rare that someone renews at 5 years. That tells you that they're bought in for the technology in the long haul. They've seen value realized. They're going to enter into the scale phase. Then you look.
Do you mean that the average contract is more like 3 years?
Yeah. Yeah. For renewals, I would definitely say in the SaaS world, it's more like 1, just because people are always switching, at least in cybersecurity, because people always want to see the newest thing. But for more expensive ticket SaaS-based products, 3 is about the average. So very rarely do you see 5.
Can we infer, or is maybe a stretch, so that's why I asked the question, that Westtrack was willing to sign the contract for 5 years just to lock the cost of Palantir right now?
I mean, there was definitely cost savings with that for sure. And then also too, I think that they were confident that they were going to get that value back, right? So when you do sign a 5-year or 3-year deal renewal, SaaS-based companies will give you a break on that. And then you look at Azul Energy. When I started looking into the press release, Azul is a Angolan energy company that's actually 50% owned by BP. And just another energy company getting on board. And it talks about how they're using AIP, but also Foundry to do the upstream oil production and the upstream ontology. So basically, hey, we're going to run our whole business on this, just like BP and other energy companies are doing. And then in the press release, Palantir said, hey, this is why we've been doing the energy business for over a decade now. So I think there's just it's still so nascent. I still think so many people don't know about this company. I talk to customers in my current job, even though I don't get anything from Palantir, but if I see a need, I'll bring it up and they'll be like, what are you talking about? Like when someone wants to get FedRAMP certified, I'm like, Palantir FedStart. You're not going to get any faster way.
There are people you talk to that actually ask about FedRAMP certification?
Oh, yeah. FedRAMP certification is critical in the software world.
Wow.
to be able to get your local government customers and to get the federal government to purchase, you have to have FedRAMP, at minimum moderate, but if you can get FedRAMP high,
But does the name of Palantir turns out in this conversation, or just wordy?
Say that again?
Is Palantir name popping out when this conversation arrive, or
no, they don't. No, they don't. And someone said yes, they do have IL6. That is correct. Amazon and Microsoft are the only other ones that are IL6 certified. No, people are like, they want to figure out how to use. They want to use their data to make better decisions, or they're having a lot of logistics, supply chain. There's so many customers like that in manufacturing and everything. And there's not a lot of solutions out there, right? You can homegrown, you can try to build it. You can use an ERP system for part of it. And so that's my opportunity to be like, hey, I know we were talking about cybersecurity, but you talked about this. Let me tell you about something I'm super passionate about, and I get no commission whatsoever, but I can talk your ear off.
They'll probably take you a little more seriously when you say you get no commission.
Yeah. Like they're like, yeah, send me a link, send me a demo, and I've emailed Palantir guys like, hey, this could be a good lead.
So more on the compliance side, we can say that there is demand and validation of the market, but not recognition that Palantir can actually solve that. Is the conversation actually changing a lot when it comes to AI? Because I remember that when we had the first conversation months ago, the problem was that even inside the industry, people were not really aware of what Palantir was. And now things are changing, and actually things are intersecting, obviously, a wave. Gartner has these charts that show the hype cycle of any new technology. Starts from a trigger, it has a peak of inflated expectation, then there is some disillusionment, and then things gradually adjust. So my question for you is where we actually are. Are we already at peak inflated expectations, maybe with Nvidia reflecting already a very rich number in terms of multiples, or we are just still here? Where do you think we are?
Yeah, I mean, I think if you're going to hone in on Nvidia, right, like we'll see a pullback. Now, will it be 6 months from now, a year from now? I don't know.
Well, wait. I don't mean in terms of stock.
I get
in terms
it.
of
I'll get to the
underlying trend.
I'll get to my answer. I'm setting the answer up. There will be a glut in hardware eventually where they're anticipating more demand than they can, and they won't be able to fill it. And they'll go through that same thing, and everyone's going to freak out. Back to the question with that of, are we at the peak hype cycle? I think there's so many use cases that haven't been explored and proven and shown. I think once the actual return on investment and the actual utilization of AI happens, we still have further to go. So I don't think we're at the hype. We may be at the hype from valuations, but once people actually start seeing the real world applications and what can be done, I don't know if you guys watched the Tesla live spaces tonight, but
Elon with FSD, right?
Yeah, Elon with FSD, 45-minute drive. They're now able to capture real-time video footage and being able to use those neural networks to update the self-driving and learning in real time with capturing new video. And I was listening to Sawyer and some of the other big Tesla guys on YouTube, and essentially what this will help solve for is taking autonomous driving to India or other countries, and the different types of driving and scenarios that you would only see, drivers in China is different than the North American, highway system. And so it's revolutionary. We've never been able to do that without LiDAR and other things. So my point is that I think there's so many things that we haven't seen what artificial intelligence can do that no one's really said, hey, I saved X amount of millions of dollars because of AI. But I think we're going to get there. And then it's going to be like, oh, I need to learn something about this stuff one way or the other. Either sell it, learn how to program on it, do something. But it will play a big role in our lives, I believe. That's just my opinion.
You're more on the hardware side, so something closer to what Nvidia does. My question is the demand kind of the same from each sector, or there is a sector or two sectors that are clearly driving the way? Because my speculation, it could be that if we can grasp what are the leading sectors, maybe we can hint of also what the kind of customers we could also expect from Palantir.
No, that's a great question. I was actually looking at that for my paper on Nvidia. I think there's some sectors that are ready for a big breakout, and Palantir is already putting a lot of focus in these areas. So one of them is like biotech and pharmaceuticals and healthcare. There's going to be a big revolution, in my opinion, in the next 10 years in healthcare, from what AI can do with drug discovery, from predictive analytics, from, hey, you know, Arnie's like getting much healthier and he's running 5K marathons. We should give him an insurance discount because he's taking care of his body. You know, there's going to be a lot of different things that happen in healthcare, especially on drug discovery and gene editing. So I know Palantir's already put a lot of focus on that and different pieces in their artillery with Foundry. And Nvidia has made so many partnerships and so many supercomputers in this industry for that. So I think healthcare is one. Finance is definitely, they're trying to figure out new algorithmic ways of trading, and you know, the house always wins, right? You know, we know all these supercomputers are trading really fast and doing all that kind of stuff. I don't think there's any one particular industry. I think everyone's trying to figure out how to use it. But the big ones that I think are going to make the biggest impact are like healthcare, finance. Those are two biggest that I just think that just, you know, but then you look at traditional things like energy, and you look at, you know, things that, you know, local, state, and government can use. Like there's a lot of use cases that just, you know, haven't been fleshed out yet, but I think we'll see it.
Mm-hmm. It's going to be really interesting to kind of see how the industry ultimately expands. I think the core point that I was thinking about this entire week was, if there's more demand for GPUs writ large, I mean, they beat guidance by 2.5 billion. That just means these models, these LLMs, that I had a good Twitter Spaces with Coach Rep yesterday, and he talked about these models are in more demand to get trained. I mean, he went so far as saying, I challenged them on saying, what if LLMs don't even matter 10 years from now? And his argument was, you will not have a job in the knowledge worker space if you don't know how to interact with an LLM, because that's how powerful they are, at least on the enterprise level. And he's selling this stuff all day. So it seems like if there's more training demand from a GPU perspective for chips, as you said, Dom, that all these companies are buying up, that means these models have to be trained to some capacity.
Yeah.
If these models are getting
and
trained,
that's why you're seeing the rush, right? Because you're seeing the demand of, I need this now. So on the, and I feel like I'm doing way too much talking here, so please.
Oh, you're good. You're the guy who's held this spot since 2019.
Like, I listened to Tesla on the Spaces today, and they just made an order for over $400 million and more GPUs, right? And they said they're going to buy even more. The rush is, until Dojo's up and running for them, they need to get learning and training these models ASAP. So every company is trying to rush to spend the time. You know, I was watching Dell Technologies. I worked for them for 11 years, and I saw them on LinkedIn setting up AI generative workloads for customers and saying, this was the most fun ever we've set up in a server farm, and seeing testing for large language models, and the heat that these servers were putting off was just ridiculous.
Yeah.
So you're seeing everyone fight to get first mover advantage, because what are they trying to do? Going back to it, they're trying to find new efficiencies, new automations to lower costs. How do I beat the competition? If I can get there first, maybe I can get a leg up until they catch up. And so that's why you're seeing this big gold rush for these chips. So, but they don't know how to use it. They don't know how to program it either. You know, like, that's another thing.
So should we be excited for the fact that Nvidia is actually getting strong demand? Because that was a very core question.
Yes.
That
why lay out the case? Why is AIP going to benefit from Nvidia getting strong demand? Why do you? What's the
because AIP allows you to actually privatize and securely privatize your large language models and the information, and control who has access, who can actually run the large language models, what access do you have of that data. You know, the beauty of Palantir that people overlook is it was built on a platform and a principle of secure first. Everything was built on, how do we control that? Amit only does this job. He only has access to this stuff. and he can't go anywhere else, right? It's zero trust security. And they were doing that years ago. And so with these large language models and copyright infringement and all these different things you're seeing about AI now, people want to protect their data. And if you're going to use my data, you're going to have to pay me for it. Well, AI.
But why does Nvidia's demand mean that Palantir has a bigger market to sell AIP into?
Because it's validating that people want to use AI to drive business results. And so if you want to do that now, okay, so what? You have all these GPUs. Do you know how to use the large language models? Do you even know what your goals are with these large language? You have all the data, you have all the statistics. Do you even know what to do with that? That's where Palantir and a forward deployed engineer can help you understand of what is the real problem you're trying to solve. Well, Arnie is a CEO of a digital communications company, and he is trying to grow his business by 2x by the end of the year. And he wants to get into multinational different countries, and he's having trouble acquiring, new customers, right? That's a problem. How do we figure that out? What countries is he having success in? How can we then use that data to then replicate that, right? What if he makes some different decisions and builds out an office in France, and we do a digital twin mock-up of his business, and we say, okay, what if we did this? We don't have to make those actual physical decisions. We can try that out first in this digital twin ontology.
Right.
This example goes really well in logistics. When you look at trucking companies and supply chain, Palantir really thrives when you look at the predictive analytics of, like retail. What products are selling? What should we be stocking the floor with? What should we get?
So as the Nvidia shareholder, your argument for this massive earnings beat is that it means that Jensen Huang on the earnings call, when he talks about every organization in the world realizes that generative AI is going to increase their revenue per employee and make them more productive.
Yeah, oh, for sure.
None of that matters unless the LLMs have something like an AIP to be implemented. But Nvidia having the demand proves Palantir has a market to even sell AIP.
Exactly. And the most exciting piece for me, other than the numbers, they were good. They weren't like breathtaking. But out of the Palantir earnings was, I don't know if you guys caught on the key statement when Alex said, for the first time ever, we are getting requests from the IT infrastructure department. This is the department that I work and sell to every day. The people who hold the keys to the kingdom for the data center, for the networking, for the cloud spend. Well, normally they weren't going to Palantir because they didn't know what Palantir was. They didn't know what they needed it for. But all of a sudden, ChatGPT comes on and people are seeing AI can actually make life easier and more automated and better results. And so what do? You see a whole bunch of executives saying, hey, IT department, you better figure out how to get this generative AI stuff going. We need it because everyone else is doing it. Everyone's talking about it. And I want an AI strategy for next year. And so the fact that they're now getting to that buyer, that influencer within the organization, now it's just a matter of getting hands on keyboard and start finding little use cases to show them, hey, this will work.
So I believe we can summarize all this topic with it's not that the revenues beat from Nvidia directly benefit Palantir, but we can infer that if Nvidia is selling a lot and have a very strong expectation, we have a validation that when Karp says we have unprecedented demand, is not Karp just being an egomaniac, but there is an actual proof that what he's saying is actually matching with what other players are showing. So for us, at least from what I see, is a very strong validation that, okay, there are conditions emerging that give me confidence that the growth that have been quite bad is actually set to change shift. And I think it's very, very different from what we saw last year. You remember when Apollo was launched, inside the community, we were super excited. Apollo is groundbreaking. And I think they also believe Apollo is groundbreaking. But it seems so far that Apollo was one of those products that was too ahead to be actually appreciated at scale. While here, we have a product that is ahead compared with what other players are maybe doing, but is not that ahead, is matching what the current the customers currently want, so that it is understood. So the difference I see from a non-technical guy perspective is Apollo is a groundbreaking product. Probably it will make Palantir evolve and grow a lot in 5-10 years, when companies will realize, holy shish, we actually to deploy the huge amount of mass of AI models, edge systems, I actually need Apollo. But that moment that with Apollo will arrive in 5-10 years, with AIP, we are already there, because they dropped a new product that seems to perfectly match the demand. And actually, this is a risk Carpe mentioned 2 years ago, or even 3 years ago, that by building products ahead of the demand, there is the risk that if we drop a product and the demand is not there yet, basically we lose an opportunity. But now, at least my perspective is they drop the product maybe later, but when there is a validation that that product actually is needed. It's more like an Apple strategy rather than, okay, let's build an unfolding phone and hope it goes. Like Apollo was more like that. Maybe the idea is actually even good, but not in the case of a phone, foldable phone, but maybe it could even work. And that was more Apollo. While now I see more, okay, there is clearly demand for watches. Let's drop a watch. What do you think with this?
I would agree to some of that for sure. What I'll say about Apollo is, and you're right, it's ahead of its time. A lot of companies can actually already use it though, and what it does and how it gets applications updated in the most remote places and how it uses edge technology. In fact, Apollo is what makes FedStart possible. But the buyer and the influencer and the decider in that conversation is the developer. And I can tell you firsthand, because we sell products to developers. Developers are the most coveted group within an organization. They're like protected. They're like the guy at the bottom of the basement in the office space, my stapler guy. Like they are like, you can't find them, right? Like they don't want you talking to their developers, because the developers do want all the coolest tools. They want to be able to get their applications out as fast as possible, which Apollo definitely helps out with. It's a much harder sell. It's a much more technical and complicated sell, whereas AIP is easier to grasp. It's also at the right time where the hype is there and people want to know more about it. And it's easier to get to the infrastructure team who actually cares about this, because they're being instructed to find out what to do with AI. And I don't know if you guys saw on LinkedIn, Palantir had an AIP Midwest conference, like a small get together of getting customers on how to use AIP. So Molson Coors was there. Because a couple other big businesses were there, and they were at a restaurant and they were talking about using AIP within their businesses and to get their hands on the product. So you could see these like mini little events that they're now doing while the iron is hot. And so Apollo is definitely a more complicated sell, and it's a different buyer.
Well, the thought I had while you were saying this is, could be that the spike in demand for having FedRAMP is something that actually triggers the demand for Apollo. In the similar way that the demand for generative AI, so LLM, into your business is actually what is triggering the need for an ontology, because also, as the CodeStrap said, if you want to run an LLM and you don't have a semantic layer that makes you say that, okay, this is not just column A. This column A actually means something. Without that meaning, basically, you have algos that gives you answers that are completely detached from the reality. So could be the parallel right, so that the spike in demand for compliance could be actually what triggers the demand for Apollo, in the same way.
Yeah. Yes.
ChatGPT triggered the
so
demand.
If they really start pushing FedStart, Austin had a wonderful comment. He talked about FedStart, and he also said Foundry Marketplace will attract more users with network effects to get your
I even forgot about that.
And you know,
I forgot about that one too.
We're starting to see people build their applications. You know, look at HCA. HCA was able to reduce their wait time by 28% on all their hospitals. Like, those are kind of quantifiable results that like any CEO will sign off and say, hey, it cost me $5 million, but I saved $25 million. Let's go. You know? So yeah, that was a really smart let's see.
I think one of the things that people aren't necessarily recognizing is people are still digesting this whole thought process about LLMs and stuff of the like. So I think Arnie was right when he was kind of talking about in 5 years' time, Apollo will be extremely important, because when you start training these AI models, you're not going to want to say utilize all your AI models and everything that you have in your model library going to the edge, right? And say like a little tablet that's out in the field or a satellite that's in outer space, because you have limited space in those things and the computing power is much less. And so the opportunity for Apollo is, once you design and build applications that can use it, right, or can have artificial intelligence kind of utilizing and focusing on specific data that's out in the field, I think Apollo will really ramp up. I think that because we're still digesting from a full company perspective, you have yet to see so much stuff pushed out to the edge as of yet. And I think that that's really where Apollo will benefit wholly in the future. And another thing is about this whole thing, I find it very ingenious not ingenious, but just genius, I guess, overall, the fact that it's literally just a bolt-on, right? Like AIP isn't something where they're like, oh, well, you have to reconfigure Foundry, or hey, we have to. So the thing that's beautiful is you can't construct something like AIP and not have that forethought if it can't just bolt right onto it. And I think that that's something that people aren't really fully recognizing as of yet, is like Gotham, Foundry, Apollo, all intermeshes with AIP seamlessly. And I think that people don't fully, truly understand or comprehend that yet. And organizations, I think, will be pleasantly surprised by what they're able to accomplish with AIP in the future. Anyway.
No, I think you're spot on. And someone asked, why aren't they advertising more about this? My guess is they're going to do, and we talked about this 2 years ago when we were doing this, they're going to take the market how they want to take the market. And they are slow rolling this strategically in the way that they want to. No one's going to tell them anything different, because Peter Thiel and Karp have F shares and they can't be bought out.
And we say slow, but in 10 weeks, they have 400 customers in the pipeline.
Right.
Slow.
Yeah, but I'm saying they're wanting to use that unique business model. In fact, I think, I can't give credit to who on Twitter, Andre or something.
Andre.
Yeah. Said the most profound thing when he talked about, or he actually interviewed someone who got a job at Palantir, and they looked at Snowflake and they looked at Databricks, and they said, you know, these will do X, Y, and Z. He said, but Foundry will change your entire business and how you operate and change everything. And so when you look at that, that's not a quick sale. That's not a quick adoption. You start with like building Lego blocks, right? You build a little block here. We've got a use case. Okay, we got to win. Now they're giving us more money to try this other department, right? So that scale process takes a while, but then you look at what the top 7 or 10 customers for Palantir are doing. They're still growing 14, 15% every year. That's showing you that they've found that scale motion with those. So I think we'll really see a lot more as time goes on. Just got to be patient. They're not.
I think another piece of it as well is like, advertising is a tricky business. When you see an advertisement in the airport, who are you advertising to? You're advertising to the everyday person. So why does that ever matter? Like, I can't go into undisclosed oil company and make a decision, right? So who are you going to call? You're going to call the CEO, the CTO, the people that can actually make that decision. So in reality, it's just like, okay, why aren't they advertising more? Why aren't they advertising more? It's like the same reason why you don't get a ticket. Me, you, well, I think we should get tickets to AIP Con or Foundry Con, but magically you see all these companies showing up and presenting. It's like that's who they're going for, right? That's their advertisement. So why would they be wasting money if they could just pick up the phone and get the call directly to the decision maker themselves? And so
well, guys, let me be the more technical, the more financial geek guy here. And the answer of why Palantir doesn't spend more is actually very strictly connected with GAAP profitability. The amount of money can actually spend depends on what is not how much dollars we can spend, is what's the biggest amount of dollars we can actually spend while keeping GAAP profitability. To keep GAAP profitability, it means that you're not overspending and you have a big chunk of around 20% of stock-based compensation on revenues, which means that the most money you can spend on cash is 75%. So if the adjusted EBIT margin is 25%, then you have a chunk of stock-based compensation that keeps that down. And now we have a 2% operating margin on a GAAP basis. It means that Palantir is already spending the most given its limit on, let's say, it's like saying, I want to stay green at the end of the month after all my bills are expensed, but I just need to be positive. I don't need to be extremely positive. So what do? You actually spend the most, but a little bit of dollars just to stay positive. And that's what's happening with Palantir. So maybe they would want to spend more, but now they are basically spending the most given the constraint.
AIPCon probably cost them a couple $1 million.
Well, I think, Karp said this directly in the earnings report, right? People were like, well, why are you doing X, Y, and Z? It's like, well, we want to make sure people don't want to use a company that isn't necessarily profitable. They want something that can last for 5 to 10 years. And so he said that was, as much as if you actually are intelligent, you read through the earnings report and you have the time to do so, that the cash position in the company has been building, that the only reason why they're not income positive on a GAAP basis is because of stock-based compensation. But if you look at their actual non-GAAP, they've been making money, for the past several quarters, if not longer. And their free cash flow is positive on an adjusted basis, kind of going over the past, say, 6 to 8 quarters. And so obviously they wouldn't be building a cash position if that wasn't true. So I see what Arnie is saying. It's like they're basically playing this financial engineering game to be like, okay, well, we can only spend this much this quarter for, say, operating expenditures because we want to make sure that we maintain profitability. And my question kind of going forward is like, are they going to, now that they're at this point, are they going to continue to kind of use that as a floor? To me, I think that that's the most prudent thing to do, because I care about where we're going to be in 10 years from now. I don't care about the next 2 quarters. And so I would be okay if they're not profitable today, because if that meant higher revenue growth in the short term, I'd be okay with that personally. But anyway, I cut you off, Arnie.
That's the critique that Palantir is receiving. People are now expecting, yes, but Palantir is more a startup-like kind of companies. They should invest more to grab market share. And that's true. But paradoxically, we know that if clients want Palantir to actually be stay strong on a free cash flow basis, have a lot of cash in the bank, and also being GAAP profitable, there is a paradox that Palantir is actually getting marketing expenses. So basically, is marketing themselves better. It has a better brand awareness by spending less rather than spending more, in a context where basically all the SaaS companies are actually suffering. In this chart that I shared a couple of days ago, we can see that the slowdown of Palantir growth is not only related to Palantir, it's actually a sectorial thing. And I'm wondering, and this is an open question for you.
These are SaaS companies, Arnie?
This is the cloud index that incorporates basically all the cloud companies. Okay. Divided by quartile, so that we can have a sense of is this average, this median, reflecting to the aggregate, which is very close altogether, or there are some kind of extremes on the upper side and on the lower side. And we can see that basically all the SaaS companies, regardless if they are top quartile, bottom quartile, are affecting. So this chart actually shows that the slowdown of Palantir matches perfectly the slowdown in the overall spending in software. So my question for more dumb, but actually for all of you is how this should actually last still, especially if there is a high demand for AIP. So in another way to formulate it is if there is a high demand for chips right now for AI, how long does it actually take in the software side to actually see some changes?
It's a loaded question. I'll try to answer the best I can.
I know I have the best answer. Dom will give a long answer. My answer is very quick.
Yeah, I'm sorry.
Jerome Powell needs to cut rates. Boom.
Yeah.
we got
I was actually going there with rates, Amit. You'd be proud of me.
I stole your thunder.
Money was at 0% 2 years ago, and we were seeing crazy growth rates, and companies were trying to grow at all costs, like just throwing money at the wind, right? And then everyone got caught with their pants down and inflation, and then it was like a big clawback of let go people. We hired too many people. We got to get profitable. I think, I'll give Alex and his team and his CFO credit. They've been really, really good about being good stewards of protecting the business with zero debt, $3 billion in cash, still double-digit growth. I think the decline, Arnie, to answer your question, is very in line with what we're seeing across the SaaS market. Customers are really having to justify spend right now. And so also something that makes me think about their business model is, keep in mind, they only have about 4,000 employees. And the stock-based compensation is still pretty heavy to keep the super talented 4,000 employees. What they can't afford is losing those employees, right? Those employees know tribal knowledge. They know the platform. They know the customer base. So they don't have the luxury, with rates not at zero, to grow super fast and focus on growth. Right now, what they need is quality growth. And as they will get the incremental revenue as customers use the platform more, because it's a pay-as-you-go.
Yep.
But they can't be burning through customers and flipping through. They actually need quality growth.
Yeah, that's fair. Arnie, go ahead. You're going to say something.
No. I was thinking, if I have to speculate from what's the gap between hardware spending and actually seeing some results, I would say 6 months. What are your best guesses?
So what? That's going to be March 2024, you think?
I think we just had the hint. Do you remember the chart where I plotted the growth of the guidance expected? Mm-hmm. And this was the very first time in the Palantir's history since listed that they actually raised the guidance, because since they were listed, basically every quarter they guided for a revenue growth that was actually slower than the previous quarter. So we had this chart going down, 13%. And now this is the first time that they actually guided for a 16% growth. Okay.
Yeah.
It's not that much, but if we can infer, okay, maybe it's just a 30% per quarter, it's like a 16, then 19, 22, whatever. So clearly now this is very speculative, but that trend shift could be actually very meaningful. And that's why I say maybe 3 months just to see something. And in 6-9 months, we could actually see, okay, now it's time. Because we kept it mentioning at the Palantir Weekly, but I think it's worth mentioning a lot. While we see the stock moving closer as a cluster, maybe Nvidia up because it's AI and all the AI companies, and there are not many, like C3 AI, Palantir are the two poor AI play, as also Daniv's said. It's not that, because that is the reality, because there are actually other companies doing AI, like ServiceNow is also doing AI. But from how institutional investors reason, they want pure plays. Pure plays means that I put money on a company that clearly reflects a theme. They don't really care of Palantir being Palantir, the culture. From how most asset managers reason, they want a company that exposes them to a theme. So on the stack, all the cluster tends to move together. So clearly, Nvidia is then more directly linked also to AMD and well, Intel more or less, but these other companies. On the other side, the business is very different. If there is a huge increase in demand, we see a huge spike in the CPUs that actually Nvidia sells. But on the software side, that only means we have demand. So before this demand actually becomes revenues, there is a long sales cycle that we knew typically was 6-9 months, that now maybe it could be shorter just because there is high demand. And when there is high demand, maybe in order to be faster than your competitors, you speed up things. So that's why the reasoning of my 6-9 months prediction to say, okay, in 6-9 months, we will actually seeing some results of these high spec in demand.
I think all of that makes sense unless Palantir decides we're still not going to monetize AIP. Because let's say they just gave it to 400 clients. Let's say it takes 12 to 18 months for them to recognize the value of AIP. Not saying they wouldn't get any value before that, but like truly come to the conclusion that they're ready to buy. If that's the case, and again, this is what Arnie, this has kind of been your point since earnings, which is like let's level our expectations with revenue growth because we know it's coming in the future. But the question is the macro controlling or Nvidia's GPU demand controlling the AIP revenue monetization, or is it just eventually time to value and then Palantir ends up closing the deal and then deciding a pricing, because they don't even have a pricing strategy, right? The Carps probably think about that every day. How the hell do we price this once BP comes back to us and says we're ready to buy it? So it's going to be an interesting 9 months for them to end up figuring that out. Okay, go ahead, Arnie.
No, I was going to ask Dom, since you're more on the sales side, how reasonable would be to basically dump the product just to get market share? Would it be a good strategy, or it would be better to capitalize on, okay, there is high demand, so I can overprice the product? So if you were to price AIP,
would you get hands on keyboards as many as possible, eat the cost now, recoup the cost later. What customers
are you saying that they're doing the right strategy?
They are doing the right strategy. They need to have every customer have AIP, give them 6 months free, and then set the expectation. If you like it and you see value, you're going to pay.
Mm-hmm. So free now,
because people will pay for value. That's why there's not a pricing strategy for Palantir. People will pay if value is realized. So let them get hands on keyboard, because that's the best thing you can do. Now it's not shelfware, it's being used.
Mm-hmm. And I think that's the thing that makes it the most uneasy about investing in this company is you have these large customer year-over-year growths of say 30-40%, like we've seen in the last few quarters, and yet you're not seeing the revenue come through, right? And that's the thing that's scary. So it's like that's the thing where you have to trust and listen, and it's like, well, it might be reality. If this was my company, I would be doing the same exact thing. I saw what happened with Amazon when they basically were saying, hey, we're going to make things as cheap as possible. We're not going to charge you at the butt. We're literally just going to try to get more and more market share. I saw what happened with a lot of companies that have done that same sort of model and thought process around, hey, let's just get as much aerial exposure in as many industries as possible. But that's the thing that's scary to an extent. To me, I wouldn't care if the company's profitable today, tomorrow, or even in 2 years or so, because if I believe that strategy, I care about just getting as much customers as possible. Because once you do start to charge those customers, let's just say it's a $3 million contract on average. Let's just say you get 2,000, 3,000 customers. The next thing you know, you're charging them $3 million each. That's $6 to $9 million. And if you do get those true net margins of 30-40%, then the amount of money that this company is going to be generating is going to be in the same likes of, say, a Microsoft or Google. It's like, what are you going to do with all that capital, right? You can't just reinvest it back into the business. What are you going to be reinvesting it into? You're creating software products from scratch. And so it's in this big chicken and the egg sort of situation where it's like, get as much into as many hands as possible. But the thing that's scary is that in their investor presentations, they don't break that out. So you can't truly trust it, right? It's like you see that they have about a $2 million average per contract of the 600 or 400 or so customers that they have. And it's like, then you have or maybe it's closer to 3 million. I forget
2.9.
what it is.
Yeah,
2.9. Yeah. So it's like, you see that, but in the reality, it's like most of the customers that are actually paying, maybe it's 5-6 million. And then you have a whole bunch of customers that are dragging that number down because they're not paying at all. And I just want to know, it's like, that's the problem, is it's like, I still didn't make the slide. I keep talking about this damn slide I'm going to make, but it's like, you need the 3 cohorts and figure out who's progressing, who's exiting. Some people might get into that initial scale of like embedding themselves into the business and be like, this isn't for us, and we exit. And I'm just curious, it's like, how many people do you get in the conversion rates, right? Like, how long is it taking? What's your average contract life? You know, I feel like if you just had one slide, I think Palantir could honestly run their investor presentations with one effing slide, which is, how's the entire business looking? Maybe it's 4 different like pieces of it, but it's like, here's the business as a whole. This is the government. This is the commercial. Here's the total customer count for the entirety of the business. Here's our revenue. Here's last year. Here's this year. And then you have the next cohort, which is the scale phase, which is, you know, the part where they're actually generating as much capital as possible, getting as much gross margin as possible. And then you have the middle phase where they're kind of expanding and continuing. And it's like, how many people are moving from expand to scale, and how is that looking over time? And then same thing with kind of the initial phase where they're just kind of, it's like, maybe we have 100, 250 customers in this initial scale, or this initial part of the revenue cycle, which you're not generating any money. And so in that this case where you're getting the discrepancy, it's like, well, you're growing 30-40%, but it's going to take 18 to 24 months before you start generating any revenue. It's like, well, none of these guys in this lower bucket have moved to a place where they can actually start expanding and actually generating revenue for the company. And it's like, well, that makes me feel a lot better, but I don't know that because they don't share that. And it's like,
that's the risk, I guess, to investing, right?
That's the risk.
It's
the risk.
I mean, I think we will see in the 10K at the end of the year, at least last year's 10K, they actually broke down how much they were seeing from scale, expand, and acquire. So that will give us some insights there and how things are progressing. I think that you know, there are a lot of comments in the chat about like they like their pricing or not like the price. Austin's just on fire tonight, man. This guy might work for him. I don't know.
No, he's good. He's good.
He said, you know, they're able to prove the results and also do it at economies of scale and come downward on the supply chain. The difference between Palantir and other software companies, because I know someone in the comment said, hey, all software companies do a proof of concept and they land and expand and get you to buy the product. The difference is Palantir is tackling the most difficult problems, helping the customer understand what those problems are that they actually have, and then they're quantifying it. That's the big difference. That's what attracted me to Palantir from the get-go, was I had not seen a software company quantify so easily the return on investment and prove it and say, look, you're going to pay us $1 million because I saved you 3. There's not many companies in the world that can do that and prove that. And that is something that makes it a lot easier to keep a customer when you're doing that kind of stuff.
So do you agree that what Karp was saying, that most software companies are actually better at selling you stack dinners rather than actual results because they don't want to actually show the results?
Yeah, I mean, I think a lot of companies don't have the right product that can solve true business outcome results, right? They can solve a fraction of it. They can solve this feature or that feature or help you get this much better. But to truly transform how your company does business and looks at how to make decisions, only Palantir has that ontology. And that is truly what I would be selling if I was a Palantir AE out in the field. Like, it is a paradigm shift. So that's why the sales cycle is longer. You have to get the customer to think differently. But once you do, the results are just phenomenal.
Mm-hmm. Just to make one step back, could you show the slide again? We were saying about the Palantir presentation removing the cohort slide, and I believe when you remove some information, you hide some information, basically is because it's too good or too bad. And I think here is a kind of a mix, because on the one side, we have the impact of the SPACs revenues that is too bad that needs to be hidden, because basically in 2021, since they start contributing. Initially, they had a very strong contribution. Actually, I underscored initially when we were seeing the slides with US commercial having a very, very strong growth. That was actually primarily driven by SPACs. And the big customers that were not SPACs were not actually that big, and they were not really growing that much. But now we are seeing the opposite. We know that SPACs are basically gradually dying, apart from a couple of them. The amount Palantir is receiving is lower. So there is an interesting theme happening right now, that we see the revenues that initially were inflated thanks to the SPAC contribution, because we had a period with the organic growth plus the SPACs that basically inflated the numbers. And now we have the opposite. The overall numbers that are dragged by the SPACs, that rather than contributing positively expanding, they are actually reducing the overall growth. And what's interesting is that the overall growth of the commercial revenues were like a plus 10%. But if we exclude the SPACs, it was actually 19%. And by focusing more on the US commercial, we know that the real growth from existing customers that were not SPAC was actually closer to 40%. So this to say that maybe they are removing the slides because on the one side, they are too bad in terms of what happened in 2021. Obviously, there is there. But on the other side, if we actually showed how the overall customers are expanding, we could have two precious hints on what their actually strategy is, which maybe is truly keep a very low price in the very first 1-2 years, and then lock the customer for a 5-year, like Sompo, like Westruck. So I think there is both explanation on why they're hidden. SPACs side, too bad. But maybe there are some hints that they want to hide on the too good side, and they don't want to clearly give the opportunity to actually other guys in analytics to infer, okay, what they're actually doing with their clients.
Yeah. So that's why we do all the digging as nerdy Palantir investors on a Friday night trying to figure all this stuff out. All right. That's it for us. This was awesome. Dom, thank you for being here as a resident Nvidia, soon-to-be millionaire. I mean, it's going to happen eventually if you keep holding those damn shares.
What's the opposite of bagger?
What's the opposite of bag holder? Yeah, it's the guy who walks the bank holding the bags. All right. This is awesome. Thank you, everybody, for being here. We appreciate it. We will see you next week on Palantir Weekly. Hopefully, Nvidia's earnings gave a good understanding of where the AI market is going, and we are 4 guys trying to figure out where Palantir's role is going to be in that AI market, and hopefully we'll see over the next couple of years kind of how it all plays out. Everyone's Twitter's in the description. Please follow us on Twitter, and Arnie's Substack, PalantirBullets.com, one of the best Substacks on Palantir ever, so please subscribe to that. It's free to subscribe. Follow everybody on Twitter.
Palantir.
Thank you, everyone. See you next Friday. Bye-bye.
Bye-bye.